Welcome to the Capital News. I'm your host, Alex Karitis. Today is December 23rd, 2019. Thank you so much for joining me. I know I was away on Friday and I did not do a week ahead segment on Sunday. To be perfectly honest with you, just needed the break. It's like Groundhog's Day, living in the twilight zone here over the past few weeks. Same story, same song and dance. Really not much of a conclusion to anything. Just needed a break. Plus, obviously, it's very close to the holidays and had some friends and family from out of town and visiting and spending time there, and obviously finishing up and doing some last-minute shopping as well. So excuse my absence for the past couple days, but that explains it. And of course, this week being Christmas Eve and Christmas Day and all that stuff is going to be a short week as well. But I wanted to make sure that I did a podcast today, more or less just to wish everybody a Merry Christmas, but to go over some things because we did have some economic news here in the U.S. We have U.S. durable goods orders falling. Of course, they throw in this word in the headline, unexpectedly. New orders for U.S. manufactured durable goods dropped 2% in November, following a meager 0.2% growth in October, and missing market expectations of an increase of 1.5%. So we dropped 2%. Market was anticipating an increase of 1.5%. Demand for transportation equipment led the fall, while declines were also seen in orders for machinery and primary metals. Orders for non-defense capital goods, excluding aircraft, a closely watched proxy for business spending plans, edged up 0.1%. How did the markets behave? Couldn't care less. Couldn't care less. Bad news is good news. Good news is good news. There is no such thing as bad news. That is the moment we find ourselves and have for really the past several weeks, because the markets have pretty much not had a down week unless there was a little bit of a pullback in the expansion of the Federal Reserve's balance sheet. So it's that 1-to-1 ratio, and I will be posting that video. I know I've promised it, but I told you guys I wanted to see what happened till the end of the year, just to see how much of a 1-to-1 relationship it is between debt expansion, balance sheet expansion from the Federal Reserve, and how these markets behave. So look for that either the end of this year or very, very early in 2020. That will be up there, and then we're going to continue to monitor that trend throughout the entirety of 2020. We'll talk about it on the podcast, and I'll do updated videos on capital economics as well. But here we have some other interesting news, because we've been talking about Boeing on a handful of previous podcasts, and we now have the CEO stepping down. But don't worry, he will be given a golden parachute, pardon the pun. I'm sure he's going to walk away with tens of millions of dollars. I've seen some reports up to $39 million. You heard me correctly. This guy is going to walk away. I'm sure it will be found that upper management pushed for production numbers ahead of safety. That's what we're starting to hear. That's what we're starting to see. Remember, folks, it wasn't that long ago where we had news coming out from Boeing saying that they were anticipating that the 737 MAX, of course, that's the airliner that's been in question here for pretty much the entirety of 2019, was going to be operational by the end of this year. Now we know that that's not going to happen. We've seen the Boeing stock tumble, which it has done, and then, of course, it's picked back up a little bit, and now after today's news, Boeing stock rallied. So, I mean, it's never enough. They're just continuing in this PR mess that they're in. This is damage control. You got to get rid of this guy, maybe get somebody new in there. And of course, who they're bringing in is the chairman. So now he's going to be the president and CEO. And so we're going to just have to keep monitoring this story. But what we know is it's not getting better. The plane is not going to be operational by the end of this year. It's not likely going to be operational in the first quarter of next year. And I said at the earliest, my analysis a while ago was, if this remains a technical glitch, a software glitch, and not a structural one, then this airline might be operational come the second quarter of 2020. Now, it might be halted altogether. Not saying that the plane could be operational, but new production of the 737 MAX airline, they're halting that production. How long that's going to be, it's indefinite right now. They could scrap the 737 MAX, which to me would say that, hey, guess what? This isn't just a software glitch, it's structural. So if that happens to be the case, that it's structural, how can the airline ever become operational again, if that's true? And if that's true, that will have huge ripple effects across the entirety of the U.S. economy. Boeing is a powerhouse a manufacturing powerhouse, the supply chain, everything. We've gone through this analysis before. The paint, the metals, the composites, the rubber, the glass, the electronics, everything. The transportation to get it from point A to point B throughout the entire supply chain process. It's huge. It will have major ramifications, not to mention the employment with all of it. This is something that was not on our list by Deutsche Bank, of course. They left things out. This is one of them. And this is one of them that we've been talking about here for months. That it could be Boeing, who manufactures airline jets, but GE. Don't forget Harry Markopoulos and his team of forensic accountants saying, hey, these guys have been committing accounting fraud for years. And if history is any guide, when it's made known publicly that a company has been engaged in corporate fraud, a corporate accounting fraud, and he cites Enron and WorldCom, within 4 months, those companies declared bankruptcy. Now, I know it's hard to believe. You say GE, the blue chip of blue chips, or at least it used to be. Going bankrupt? Are you kidding me? Well, that's what people said a decade ago in regards to Lehman Brothers and Bear Stearns and a whole host of other major financial institutions. It can happen again. And believe you me, I believe it is going to happen again because there is too much debt, there is too much malinvestment. Nobody can make heads or tails of anything. Why? Because of the malinvestment. There is no true price discovery. Prices send signals. Buy, sell, hold. Be careful, be aggressive. We don't know what to do because the Federal Reserve and the federal government are just throwing a whole bunch of money at the wall, hoping something sticks, and that these wheels will finally gain traction and we can actually have some type of real growth. There is no real growth, by the way, and the more liquidity and the more debt that they throw into the system, the worse it's going to become because it's bringing future demand forward. How much have they done? Years worth, probably generations worth, because when you have your downside, it always overshoots, just like to the upside. It's never perfect balance, and that's okay. That's okay. But when you have the correction, and it will come, it's going to be devastating. And so those are a couple risks that we have to keep our eyes on throughout 2020. Boeing and GE. Now, the interesting thing with both of these two companies, obviously their size, they're obviously well known throughout the world, but they're also members of the military-industrial complex. So is Uncle Sam bailing them out behind the scenes? Is GE a part of this overnight repo fiasco because they're a major corporation? Are they needing bailed out? Are they part of this too? Because they have financial units. And even if it wasn't financially related from being a financial institution or having that type of wing with their insurance products and whatnot, you think Uncle Sam and the Federal Reserve behind the scenes aren't going to do something if they can? I mean, I hope that's not the case, but it very well could be. And don't forget, the Federal Reserve over the past couple of weeks till year end is going to throw $500 billion worth of liquidity at these markets just to keep them alive. Not for them to thrive, which wouldn't be right either, but just to survive. Just to sort of keep trend. Allow for this little this melt up to continue. I guess it's not really mini because it's been taking place for quite a while. So there's a lot to be focused on, a lot to be concerned about as we move into 2020. This liquidity is only going to be temporary, and eventually they're going to have to pull it away. No, they don't have to. They're going to do what they want to do. But to look credible, if they care about their credibility, they're going to have to start pulling it back because this was supposed to be temporary. This was back in September. Then it was a one-off. Then it became temporary. Well, if they keep going, it's going to start looking more and more permanent. And if that's the case, we have no market. It's gone. It is gone. Free market capitalism? Never heard of it. Not in this country. President Donald J. Trump, as long as I'm president, this country will never be a socialist nation. Too late. Too late. This is central planned. This is centrally planned. The Federal Reserve and the federal government. And you got Donald Trump, who says, I don't really pay attention to the stock market, and all he does is talks about the stock market and tweets about it. So who do you want to believe? You want to believe the president who lies on a daily basis? The Federal Reserve who can't tell their rear end from their elbow? Or do you want to look at the hard facts? You want to look at the data? You want to look at your real world experiences? Come on, use your head. Don't just believe the tweets. Don't just believe the headlines. That's why we dig deeper here at the Capital News, to give you that well-rounded picture. Things aren't what they seem to be. You have a master salesman in the White House right now. We could go through an entire list of the statistics that he throws out, and I could compare them to Obama. And before I put their names on them, you wouldn't know who was who. This is a question of how somebody comes out and presents what's going on while they're the president of the United States, while they're in power. My point is, I don't defend Barack Obama. I didn't like him, his policies. Obviously, I don't know the man personally, but I don't like his policies. I don't care for how he acted on most occasions. But I could give you statistics during his administration, and you would think that these were Donald Trump's numbers. So, well, clearly the jobs numbers have to be better under Donald Trump. No. They have to be. No. Well, clearly the stock market numbers have to be better under Donald Trump. 6 in one hand, half dozen in the other. Nope. It's just a question of how you market yourself and how much you talk about it. It's not common for presidents to talk about the stock market or to be obsessed with the stock market, especially not to the degree that Donald Trump is. And again, I think that's setting a very, very dangerous precedent. I think it rises to market manipulation, especially when it comes to all the China trade talks and all that BS. So, a lot of things to look forward to in 2020, going again through that list of Deutsche Bank, which we spent a few podcasts doing. The general theme is a wave of debt that is coming due and still has to be dealt with. Also, that even Deutsche Bank is admitting that these markets are being financially engineered by central banks around the world and by corporate share buybacks. Not because of growth, not because of innovation, not because of healthy and strong global consumers, not because of strong and vibrant corporate balance sheets. Why not those things? Because those things don't exist. They don't exist. The U.S. consumer, again, is all too eager to put everything on the credit card. At record high interest rates, mind you. Solve that riddle. We're going back to record low interest rates, yet we have all-time high credit card interest rates. And why do you think every time you have an earnings call from the banks and the financial industry, oh, yeah, they say the consumer is strong, they're doing fantastically well? Of course they're going to say that. They're paying you 17% every month. Something that costs $100 is going to end up costing them $1,000 by the time they're paid off. Of course every banker is going to say, oh, yeah, the consumer's doing great. Don't listen to those people. You know better. You know better. Look at the numbers. So that's what we have to deal with. Boeing, again, keep that front and center. Keep GE front and center. Keep the auto sector front and center. Cash Freight Index came out. Not good, folks. It's a continuation of deterioration for the 12th month in a row. An entire year's worth. Now, again, 2018 was basically a blockbuster year. Why? Because you had a lot of the tax cuts coming through. You had a lot of debt being thrown at the system. A whole bunch of things. Fiscal stimulus, deregulation, a whole bunch of things coming through. $1 trillion deficits, which we're going to have $1 trillion deficits again. A lot of things were juicing the markets, plus the trade war. There were a lot of companies that were trying to front end any more tariffs that were coming in. So there was a build to inventory, getting things from point A to point B, just in case tariffs went up higher than what they did. That way they could at least shield their prices, and that way they wouldn't have to increase prices onto the consumer and perhaps lose market share. So there was a lot of front-end loading taking place. So you had a high benchmark, so it was easy to come in low on a year-over-year basis. The Cash Freight Index, the report, when they write that, they mention such a benchmark. But guess what? It's the continuation. It's the rate of decline. It's what they're seeing across all modes of transportation, not just in North America, but globally. And that's why I've stated here consistently for, I know, at least a couple weeks, when it comes to the Cash Freight Index, we're going to be paying close attention to the first quarter of 2020 because of the benchmarking. So if we continue to see deterioration in the first quarter of 2020, I am going to say that we are likely going to be headed into recession in the year 2020. That's what we're likely going to see. Because you still have mixed results as far as what GDP is going to be in the fourth quarter, which we will not know until the end of January of 2020, and then we're going to have multiple revisions. But according to the Cash Freight Index, they are still predicting a negative print for fourth quarter GDP. So if that turns out to be true, folks, here's what you have in a nutshell. You have the Federal Reserve throwing billions and billions of dollars at the market. You have Uncle Sam running $1 trillion deficit. You have BS trade headlines of U.S.-China trade talks and all this BS. And U.S. GDP is only going to grow maybe year over year at 2%. At 2%. And that assumes you believe their made-up inflation number, which they tell us it's 2%, 2.5%, whatever they want to make up. It's much higher than this. You know this. So if you really had a true inflation figure, real GDP would be even lower, possibly negative for certain. Negative for certain. So that's not good, because this is all off of debt. It's all off of funny money. And one would think, if this was truly the greatest economy ever in the history of the United States, that you would not need trillion-dollar deficits, and you would not need the Federal Reserve to print money like it's going out of style, because it is. But guess what? The markets are rallying. You're getting your Santa Claus rally. Everybody's happy. They don't care what the costs are. They don't care what the repercussions are. Just like people didn't care in 1928, 1929, then boom, like people didn't care in 2000, and then boom, like people didn't care in 2007, 2008, and then boom. So people don't care until they do. I'm trying to sound the alarms. I'm trying to tell everybody to stay diversified, stay vigilant. The markets can remain irrational longer than any one of us can remain solvent. The fraudsters, the tricksters, the manipulators are at the helm. They are pulling all the levers. Our volatility model has been completely shot for the last quarter and a half because of the Federal Reserve intervention. There is no volatility. There is none. They have completely stifled it. It is gone. There is no price discovery. None whatsoever. This thing just keeps going up. Why? Because that's where the money's going. That's where it's going. So you have, again, this wealth effect. You have this wealth gap that's going to continue to widen because the vast majority of the wealthy own the vast majority of financial assets, while the average Joe and Jane own none. Or if they do own them, they probably own them in their 401k, a retirement account, which they cannot touch unless they want to pay fines and taxes for early withdrawal. Now, of course, you can sell your stocks and you can still get positioned in cash, but you get my drift. If you can't touch the cash, what good is it in that type of system, in that type of environment? Okay? So it might be good on paper, but what's the reality of the situation? Yeah, you got 50-year low unemployment, but what's the quality of those jobs? If you were in the midst of the greatest U.S. economy ever, shouldn't one job be enough to sustain yourself and your family? But it isn't. It isn't. So you have part-time jobs out there. Now, people are obviously probably thankful that they have the ability to have a part-time job to help make ends meet, but that ain't great, folks. That's not great. We did that follow-up on the 60 Minutes story. Out in Seattle, people having full-time jobs, living in their cars, living in tents, because they don't want to live hand-to-mouth, paycheck to paycheck to afford rent. Forget owning a house. So this is by far not the greatest economy ever in the history of the United States, despite some flattering headlines. And don't forget that employment is a lagging indicator. It is not a leading indicator. So, and also don't forget that you have Mexico that is in decline, basically in recession, and you have further deterioration from our friends up north in Canada too. So, and those are two of our largest trading partners. So if both of those countries are headed in recession or are in recession, how do you think that's going to bode for the United States of America? Not too well, folks. Not too well at all. No matter what the trade headlines are, no matter the big breakthrough, quote-unquote, big breakthrough that broke over the weekend, that was Thunder Thumbs. That's what he was tweeting about. What was the big breakthrough? Oh, well, the United States is going to pull back tariffs, and guess what China's going to do? Yeah, they're going to pull off some tariffs as well on a lot of goods that they need to survive. Wow, what a surprise. Big breakthrough. We're getting back to where we were 2 years ago. I mean, you broke it, and now you kind of got it back to where it was. It looks kind of good, but you can still tell that there's some glue, there's some scotch tape, some duct tape. It's like a 6-year-old. I mean, you might say, okay, Johnny, thank you. Thank you. You shouldn't have broke it in the first place, but I see you attempted to fix it. Okay, very good. Don't do it again. Donnie is not a 6-year-old, although he acts like it quite a bit. Okay, he's the president of the United States. He broke it. Farmers went bankrupt. Supply chains were shifted. The Chinese are going to go buy soybeans and corn and pork bellies elsewhere, which they're already doing. Are they going to buy more from the United States? Yeah, if they have to. If they have to, they got 1.4 billion mouths to feed. I mean, this is a no-brainer. Who messed it up? Donnie Boy did. Donnie Boy did. And then the numbers that they project, it's going to take 2 years to fulfill. So you're going to start on phase 2? You haven't even completed phase 1. You still haven't signed phase 1. In October, we were told phase 1 was done. All we needed was a signing ceremony. Didn't happen. Now we're told the same exact thing. It's done. Got to wait a month. Signing ceremony. We'll see. Don't hold your breath. Don't hold your breath. This is not going to unleash animal spirits. Corporations are not sitting at the ready. Oh, yeah, I was just waiting for this little pause in the action for a phase one trade deal that got us right back to where we were somewhat 2 years ago, and now I'm going to start investing millions and billions of dollars. It's not going to happen. There's been too many hiccups. Too many hiccups. We've been here before in a trade truce, and what happened? A month later, boom, market sold off. Why? Because the truce didn't last. So are you going to trust the Chinese, or the Chinese going to trust Donald Trump and company? I don't think either side can trust either side. I don't trust either side. And I take no pleasure in saying that. But I've been jerked around for 2 years. I don't know about you. I'm sick and tired of it. But that's where we are, and that's what we're going to continue to see. Markets might continue to bid it up because they're just looking for any excuse. But net, it's off of the liquidity that's being thrown in to the markets. Now, on the political front, we have some emails that have been released. I believe this was from a FOIA request, a Freedom of Information Act request, on behalf of some news agencies looking for further information in regards to the Ukrainian matter, which is being tied to all of this impeachment hoopla. And now we have some emails that are out there basically indicating off of that July 25th phone call, about an hour and a half afterwards, there was emails back and forth saying put that Ukrainian military aid on hold. So there's just direct links. Okay, we know that the hold was put on there. Okay, we know this. We know the facts of the case. But now you're starting to see some other information starting to come to light. Will this continue to connect the dots? Are people just going to remain siloed in? What's going on? Because you still have Nancy Pelosi and the Democrats in the House withholding those articles of impeachment, which do need to be sent to the Senate. So they're continuing to play these games until there's a quote-unquote fair trial, or at least fairer terms when it comes to how the Senate is going to set up a trial. Now, you understand this to some degree because Mitch McConnell, the leader of the Republican Party on the Senate, well, what's he saying? I'm going to work hand in glove with the Trump administration. That's not an impartial juror. Now, I all know it's a wink, wink, nod, nod. None of them are impartial, but you know what? Have some respect for the process, because at least everybody's been screaming about process. At least have some respect and dignity for the process. At least look like an impartial juror. At least act like it. At least act like it for a little while. Can you not even do that? No, these people don't even care. Why? Because they're career politicians. They don't give a damn. They're there to make their money, and that's it. If they get kicked out, they're going to get golden parachutes too. They're going to end up working for 6, probably 7-figure salary at some lobbying firm. They're better off when they're kicked out. I mean, this is just a joke all around. But there are serious issues at play. If Donald Trump and the Republicans are so certain that he is innocent, beyond a shadow of a doubt, then why would you be afraid of calling in witnesses who could exonerate him? Because the Republicans have been doing nothing but shouting about not having first-hand witnesses. Well, here's your prime opportunity. You can't yell at the Democrats for the president for not releasing those first-hand witnesses and then complaining that you don't have first-hand witnesses. If they're going to defy subpoenas, if he's not going to release them, if he's not going to release information, you can't be screaming at the Democrats. And don't forget, this is part of the investigation. What the House does, that's the grand jury. Okay, that's the grand jury. You go to the trial, that's where you can start to confront your accuser. That's where you can call your witnesses. That's where you can lob your defense, okay, and try to prove your innocence or state your case. Of course, the burden of proof is on the state. It's on the government to prove your guilt, not to prove your innocence. But if you have exculpatory evidence, why wouldn't you do it? Why wouldn't you release it? So these are serious questions that remain in play, and we're going to see what happens. And then we have, on the geopolitical front, we have Rocket Man, Kim Jong-un over there in North Korea, threatening some sort of Christmas gift. A lot of people are speculating that they've been continuing to build nuclear weapons, or at least some sort of ICBM, intercontinental ballistic missile. Is Rocket Man going to shoot this thing off? We have no idea. But we're going to find out in a couple of days, I guess. I mean, if you see a red glow across the night sky, it might not be Rudolph, it might be Rocket Man. So, on a lighter note, it is Christmas. It is coming up. I know we talk about a lot of things that are negative, but we're doing it for educational purposes and to confront them because we want to make them better. Remember? Abolish the Federal Reserve, abolish the federal income tax. That's a good starting point. I would love for Santa Claus to bring that, but I just don't think that's going to happen. At least not this year, but I'll keep asking for it. But you have to confront the issues. You have to admit that you have an addiction before you can start to solve it. And that's all we try to do here at the Kapital News. Is gloomy as it often is, and like I said, I had to take a break last Friday and didn't do an episode on Sunday for week ahead segment because it's gloomy and it's the holiday season. You're trying to be cheery and that type of stuff, but you got to face it head on. You can't put your head in the sand. This is our country. This is our life. This is our future. And we have to take control of it, and we have to make it better. We can't not continue to do what we are doing. Because what we are continuing to do is what has led us to this point globally. And you're not going to solve these problems with the same level of thinking. So the mindset has to change. The thinking has to change. And that's the positive note that we have to carry with us throughout the remainder of this year and through 2020 and well beyond. So I hope everybody enjoys their Christmas holiday. However you want to celebrate it with friends, family, charity, strangers. Do what makes you happy, and stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Merry Christmas and Godspeed.